Good morning, everyone. Happy Friday, July 19th. Hopefully, everyone has had a good morning so far. Got a bit of a doozy of a trading morning this morning. Overall, I can say I'm mediocre happy with my trading this morning. However, I did render out a green day, bringing in $347. It's about 75% towards the high of my goal of the day of 500. However, I had some good trades and I had some bad trades. I think my level of anxiety was a little bit higher than normal this morning, and that was because I wanted to protect my profits of my entire week, which is my fifth green day this week specifically. And so I was kind of getting in and out, in and out, in and out, a little over trading, probably taking profits too soon, and in some cases stopped out too soon. Needless to say, guys, sometimes it just comes down to, how you're feeling that given moment and that period of time. And but today worked out, $350. I'm gonna quickly go over my trades. I traded two stocks today: Microsoft and Skechers shoes. Everyone knows Skechers. I own a few pairs. I'm sure you do. Anyways, we'll start off with Microsoft here, guys. And in a nutshell, it gapped up considerably this morning. Yesterday's close was 136.40, and it gapped up to an open of 140.25, which was a fairly large gap up. Now, what's interesting is that this could have worked out two ways. This could have been a long, depending on the trend lines and how it's holding certain trend lines I've drawn here, or it could have been a short, and I'll explain to you what I'm talking about here. Let's go to the day charts here, guys, and see if we can dissect this a little bit. I mapped out a couple of day trend lines here, and you can see I connected a trend line from this peak over to this peak and extended it over. And same thing on the lows, a trend line from here to here. You can see I also did a macro trend line from this peak to basically the peak just a few days ago. And the idea was that if it was going to hold this trend line right here, if it was going to hold this trend line, I could very well see this being a stronger push for this morning and perhaps moving up to this upper trend line in this corner up here. The reality is, it didn't hold and it started to dip below this trend line, which made me short bias. So let's go back to the 1 minute trade, short 1 minute charts. Let's see what I did here. So here we are on a 1 minute chart. Excuse the multiple ins and outs, but the reality is it's just how it worked out. So it opened up with a big, strong force down, thus passing that trend line, indicating it was perhaps weak. I did get in short, as you can see here. As soon as I got in short, it popped up. I had a very, very, very tight stop. I wasn't sure, wanted a little bit of confirmation, but I did stop out within a few cents. It popped up. As soon as it started to come back down, I re-entered short. This is okay. This is healthy practice. There's a little bit of confirmation. Came up, strong wick down, re-entered. I re-entered in this candle here, the second minute of the day. It did pop up a little bit, not as strong. It held the 9 EMA, came back down. This is where I actually increased my short position when it broke the 3rd minute candle. As soon as it broke that, I shorted even more, but I also started to take some profits. And as you can see, profits, 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 profits. So this was going good. I think it was up and towards plus $300 or $400 just on that trade alone. Popped back up, held a 9 EMA, started to come down. I went short again. This is where now I started to just get choppy, and I was going in. And now, honestly, I think I got a case of the yips, as I like to call it, and that's just like a jittery hand, a jittery wrist, and I was kind of buckling in and out, buckling in and out, in and out. The idea was I was thinking I was going to break low of day, and this is kind of why I was re-entering kind of when it was breaking and piercing these new lows. In this case, I re-entered, took a few profits here. I re-entered again, anticipating it was going to break this low and come down. Sure enough, look at this, a strong force up, I ended up stopping me out over in this range here. Took about $150, $200 loss. Started to come back down. I re-entered. It came down a little bit. Thought it was going to break this. It actually did break these candles a bit. And I thought it was going to make a new low of the day. It didn't. Buzzed around. I got out. Got some cold feet. I think it pretty much broke even there. And then here's another one too, guys. I got back in thinking it was going to break all this. And you got to look at the 5-minute candle too, because a 5-minute candle will perhaps better help you understand where I was going with this. And the idea was I was expecting this to break. Let's look at the 15-minute. This would be a picture perfect, descending bull flag. Like, it broke this candle here on a 15-minute chart. I thought this was going to be a smooth sailing down for another long leg down. And you never know, it could, because you know what? The 15-minute chart, it did not make a new high. You can see that it's losing strength right now. This very well could break down over time, and my whole methodology could have been correct. However, I don't have the entire day to trade, and it's now past 10 o'clock, and I'm usually done my trades by 10 o'clock. So anyways, right there at $183 on that. Nothing fancy, but you know what? 183 is 183. Let's go to Skechers. Skechers treated me a little bit better. I didn't trade it in and out nearly as much, but I was interested in this going high or long. Look at the massive gap up it did here. Just a beautiful performance gap up. I was long biased on this, perhaps up to $41.80, as you can see over here. It didn't quite reach it there yet. Will it? I'm not sure. But let's look at the 1-minute chart here to see what I did. So the market open, it was very whipsaw. It came down, 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 down. It found its bottom level. Here's a doji, started to squeeze up, surpassing that first doji line right here. That's indicating some strength, and that's why you do see this volume coming in. This is where I decided to take some stabs at it in this consolidation period. And so I went long here, took some profits. I think I got out 100% here. I ended up going long again here, perhaps prematurely. I should have waited for this candle to go down, but the strength was just looking strong. It was looking, and sometimes you got to go on your gut feeling. Anyways, I went long, and here I did not like what I was seeing, so I quickly stopped out. Went long again up here, took some profits. And it took one last stab for me, thinking it was going to break high of day, which I went long here. It did go towards high of day. I probably should have took some profits off the table, but I wanted to see it break high of day. And I had a break-even stop, which is perfectly fine, 0 loss. Sure enough, it did come down. It stopped me out at a break-even, which was fine. I was willing to take that risk for a high of day or breaking high of day. Honestly, if I had perhaps sold towards the high of day, I would have scooped up another $100 or so, $200 here, giving me an over $500 day. Anyways, here we are, $350 on a Friday. I'll take it. Guys, this was a very good week. I was green every single day this week. And matter of fact, this is probably pushing 20, 25 days green with only one red day. So my metrics are shaping up nicely. The idea is to have a full month green, less one red day. And if I can achieve that, that's a huge personal goal. And matter of fact, a goal that many people desire to achieve. Having a whole green month. Not very many traders do that. They honestly don't. So till then, guys, we'll see you on Monday. Have a great weekend. It's going to be stinking hot here in the GTA. Lots of humidity, so drink lots of water. And have a good one, guys. Happy weekend. Take care.